of the biggest challenge people have when it comes to investing in the stock market is choosing the right stock to invest in. You know, doing research to know which stock will perform well in the next, let's say, 6 months, 1 year, 3 years, or even 5 years. And this is the reason why I want us to see if there is a way around this. Is there a way we can just invest without looking at how the share price is going to perform for the next 3 to 5 years? And we have already talked about ETFs because I believe that is one of the way around identifying which share to invest in, because now you're investing in a basket of shares. And if you're interested in learning more about ETFs or how to go about investing in ETFs, I will leave a link in the pinned comment and also in the description box so that you can look at the video and see whether that is something that you'll be interested in. The other alternative, which is what I want us to discuss today, is investing for dividends. And today, as usual, I want us to work with an example calculation to look at what to expect when we invest for dividends, or to find out whether we can earn enough to just focus on the dividends. So the idea here is to invest in companies that have given dividends consistently for more than 10 years, and also big companies here in Kenya, meaning large market cap companies that are listed in the Nairobi Securities Exchange. And we also want to focus on just dividends without thinking about the performance of the share price, because that is something that we cannot predict. I know we cannot predict how a company is, or the dividends that a company is going to be giving for the next year, but we can look at the past performance of that particular company and how it has been giving its dividends, and from that we can learn and we can predict how it's going to be performing, although it's not 100%, because we can find a company that has been giving dividends for a long time, and then for a certain year it doesn't give dividends because of one reason or the other. But because what we are looking for is a passive income in the next few years, we want to build a portfolio that is going to be giving us passive income in terms of dividends. Okay, so because that is what we are focusing on, then we are going to be looking at a few companies that I think are eligible for this here in Kenya. Welcome to Study of Wealth. My name is Susan Juguna, a financial educator. We analyze different opportunities here in this channel to find out which is best for us. If you want to learn about different opportunities in Kenya, how they work, how you can invest and all that, you're in the right place. Just make sure that you subscribe to this channel, because we have something for everyone and you don't miss out on these opportunities, all right? Now, here is a list of companies that paid the best dividends in 2025. But in our calculations, or in our example here today, I'm going to drop 2 companies. I'm going to drop Umeme and I'm going to drop, and this is because I wanted to focus on shares that have been consistently giving dividends. These are shares anyone based on just the dividends would have invested in January 2025 without thinking of the share price. Okay, after removing the 2, we are going to be adding 2 more, and this category is based on just 2 things: the top paying dividend companies that have been consistently paying the dividends, and big market cap companies in Nairobi Securities Exchange. So this is the list of companies we'll be working with today in our example. And I have a question for you. Out of the companies we have highlighted here, which one don't you know well enough to explain what they actually do? Because as the saying goes, if you don't understand a business, you have no business investing in it. So drop a comment in the comment section and tell us, among these 5 companies, which company's business model you're not confident about. If you are confident about the business model for all the 5 companies, let me know in the comment section as well. I appreciate the engagement and it's what keeps me going, all right? So we want to assume you invested in January 2025 and you invested 250,000 Kenya shillings. And the reason why I'm using 250,000 Kenya shillings is because I'm planning to do a comparison video of investing in dividends and investing in Mansa X. So this is what we'll be using. We're going to be using the minimum investment required for Mansa X, so that it will be a good investment to just compare when that time comes, okay? And here we are going to be dividing this amount, the 250,000 Kenya shillings, among the 5 companies, meaning that each company is going to be getting 50,000 Kenya shillings of investment, okay? So this is what these companies gave us dividends for the whole of 2025, and it's dividend per share. Now, I would like us to do the calculations to see how much you earned if you invested in January 2025. We are going to be calculating the number of shares purchased with the 50,000 Kenya shillings per stock. And I want you to remember that we are using approximate figures here, because in reality, you would buy a whole share because they don't allow fractional shares, okay? So in our example, after finding the number of stocks, we will then multiply by the dividend per share to get the earning per stock, okay? So after finding the number of the stocks, we are going to be then multiplying by the dividend per share to get earning per stock. So that is how you get what you earned from the investment that you have, okay? So we are going to start with Standard Chartered Bank, the SCBK. And at January 2025, the price was 279.75 Kenya shillings per share. So with 50,000 Kenya shillings, you bought approximately 178.73 shares. And now the earning, because they gave a dividend of 45 Kenya shillings, that is 178.75 times 45 Kenya shillings. You're going to be getting 8,043 Kenya shillings, okay? For British America Tobacco Kenya, at January 2025, the price was 376 per share. So with 50,000 Kenya shillings, you bought approximately 132.98 shares, earning 132.98 times 55 Kenya shillings, which gives you 7,314 Kenya shillings, all right? Now we go to SBIC Holdings. At January 2025, price was 137.25 per share. So with 50,000 Kenya shillings, you bought approximately 364.30 shares. And the earnings now is 364.30 multiplied by 22.70, and we get 8,270 Kenya shillings. So for Cooperative Bank, at January, the price was 16.45 Kenya shillings per share. We with 50,000 Kenya shillings, meaning that you bought 3,039.51 shares. And for the earnings, that is 3,039.51 multiplied by 2.50, we get 7,599. And then lastly, but not least, EQTY shares. At January 2025, the price was 48.30 Kenya shillings per share. And now with 50,000 Kenya shillings, you got 1,035 shares. And your earning will be now the price of shares multiplied by dividend per share, which is 4.25. And you got 4,400 Kenya shillings, all right? So the total dividend earned, we add all the dividends from each company, and it adds up to 35,626 in pure dividend income. That is a solid 14.25%, all right? And if you subtract the 5% withholding tax, because dividends are subject to 5% withholding tax for Kenyans, and for foreigners, it's 15% withholding tax. So for Kenyans, we do 5%. And we get, we subtract that from what we got as dividend earns, and you're going to be getting around 34,000 Kenya shillings. And I think this is better than all the money market funds that we have here in Kenya. Actually, even the bonds, currently we have very few bonds that are giving the 14%. And you also stand a chance for capital gains. In as much as we are not focusing on that, we just need to remember that some of these companies, they did very well in 2025, meaning that if that was your investment, then it means that you're also looking at some capital gains. But again, for the capital gains, you only realize it when you sell your shares. But because you're investing for long term, you're not selling your shares, it means that you're focusing on the dividend. And the beauty of investing for dividends is that even when the markets are not doing so well, especially when the markets are going down, because when we have a period of markets going up, you will always have a period when the markets are going down. So in such cases, you'll still be making money in terms of dividends. So you don't have to worry how the prices of the share is doing. And now the secret here is to invest in well-established companies, big companies and you keep assessing their performance. If the dividends start declining for a certain period, like in 2 years, 3 years, make sure you find out the reason why. And if there is a reason to exit the market, you can always do so. You move to another company that is giving better returns, and a company that is well established, a big company, and a company that has given dividends for consistently for the past 10 years. All right. The other secret for this is to make sure that you are reinvesting the dividends for compounding. Okay, because if you don't reinvest the dividends, it means that you're missing out on compounding. So make sure that you're reinvesting the interest, and the interest is making you more money. All right. And that being said, if you're interested in investing in the stock market and you don't know where to start, I have a guide for you. I will leave the link in the pinned comment and also in the description box. Make sure that you get a copy and start this journey. It's an ebook and it will guide you on what to do from where to start to until you earn the dividends or until you sell your stocks. Okay. And for those who are interested in ETFs, like I promised, here is a video that you can watch to understand what ETFs are and how to invest in ETFs here in Kenya. All right, let us walk this journey together, and happy investing. See you in our next video. Bye.